Good morning, everybody. Rick here. Hope everybody's doing well. Today is Wednesday, August 10th. Here we are about almost top of the hour, 8:50 Eastern, I guess it is. Thank you, everybody, for being here. I absolutely appreciate it. My focus today, as all days, something I've been reading to myself for several days here. Among other things, I do a lot of writing in the morning about the market, mostly to myself. I try to share out here as much as I can. This is something I think is worthwhile to read multiple times throughout the day, and it's certainly something I read every single day here lately. And I'd like to read that. You guys have all heard it. Number one, trade in the direction of the market being considered. Trade in the direction of the market. Plan your trade with target areas and protective stops. Wait for your entry pattern. Take profits into strength and have a wonderful day. It's that simple. Now, I say it's that simple, but we all know there's little caveats here and there, most of which we create on our own. Most of them we create on our own. So anyway, I just think that is a terrific little paragraph to read to yourself each and every morning and during the day for trading. Okay, so. All right, CPI numbers are out, and here we go. So currently, the bullish trend is still alive. It's still working. For those that follow the trend indicator, you should be good and green and good to green to go until it's not. Real simple. And then that tells you when the trend has been penetrated. In some cases, if the trend indicator turns red, it'll be a little bit late. You'll be able to see that trend change a little higher. That is true. Sometimes the trend indicator will turn red before there's actually a hard trend broke. But this is a terrific guideline. Using the T-line is a terrific moving average as well. I love the T-line. I know a ton of people that use the same idea, but they use the 10-period simple. I've tried that many times, and I'm completely happy with it. I think it's a terrific tool to use on your charts. So either one would work just fine. Yeah, just fine. So good morning, Blue. Good morning, Julie, Sean, Mike, Thomas. How are you? John, Mai. Hope you guys are all doing well. Thank you so much for being here. Let's take a look at some charts this morning. First of all, I want to go over here to the Qs, and let's just see what the Qs are doing. Qs are moving up. I forgot something, and we're going back to we'll just stay here for right now. So here's what I see on the Qs. Maybe we get up into here. So it's all based on price. It's all based on price continuing to climb this wall of worry right now. And there's no doubt, for most traders, this is a wall of worry, but it's still climbing. So I will continue to trade long until it doesn't climb any longer, and then we'll look at shorts. Right now, I'm actually going to adjust this line up to right about, I'm going to adjust that line up to right there. Yeah. I just went to these lows. Picking little congested areas is one of the most easiest things in trading. Just simply look at the chart and look where price action has had a bit of argument between the buyers and sellers. It's pretty simple. So what we need to do is see follow through. We need to break out of this high over here. What is this? Wednesday, Tuesday, Monday's high. It does not have to be today, okay? We don't have to close above that number today. We don't. All we have to do is climb the wall of worry. And the wall of worry can pull back like yesterday. Now this is real time, so we're going to have these wicks on here. But yesterday, was very kind of questionable. I know some of us, we got some shorts going, we've got some longs going. Now the cat's out of the bag. Let's see what happens at the end of the day. But we don't have to go higher. We could simply stroll along sideways. Keep that in mind. SPY is the same way. Targets on the SPY that I see is 320.75, then up here at we'll call that 436 up here, and that would be the 200 period moving average. For those that don't know, this is the 200 period moving average up here, this red line, this dotted red line, is what we call the dotted deuce. It is the 200 period moving average as well, with a few little twists and turns added. The blue line is the 50 period moving average. The black line is the T line, or the 8 exponential moving average. The green dots, red dots, that's what we call our trend indicator, and it is so simple, or maybe it's so hard. It's as simple as the 17 EMA. Nothing magic about the 17. I know a ton of people that use the 21 EMA. In fact, I truly might know more people that use the 21 EMA than the 17. Doesn't mean that's more. I just know more people that do that. And I know a lot of people use the 20 simple up here. 20 simple. Okay, let's take a look at some charts really quick. Let's take a look at INSG. Now, this was on the watch list, I believe, yesterday. So I think it's still a great looking chart. Probably more of a stock trade for somebody than an option trade. I'm just guessing. Doesn't mean it has to be. I suppose it could be an option trade. So what I'm looking for is a buy area inside this red box, or a very slight breakout. When it really comes down to it, my area for buying is going to be this area right here. I really could give two hoots what the price is. I'm going to wait for price action to tell me what that entry level is. Now, that doesn't work for everybody, because some people just simply cannot be in the trading room or in front of their computer all the time. I understand that. No problem. So, one thing that might be considered is, if price hits a certain number, you have it automatically set up in your system where it triggers that, and at the same time triggers a stop in there as well, protective stop. So if it starts to break out, that number might be triggered. Well, if yesterday's high is 291, well, above 291 is where it would trigger. It's not rocket science. And then put your stop in there. The little thing that I read this morning, trade in the direction of the market. Market looks long at the moment. INSG, trade in the direction of the chart that you're going to trade. There you go. Now you wait for that entry setup. There you go. Plan your targets. There you go. 327 would be a target. And then I'm going to put another one right here at the 200 period moving average. And then up here at $5 is where I think it might possibly end up over some time. Pretty simple, really easy. Also, if I enter this trade, as always, I post the alert to the members in the members app, the price, and if I do an option, I post the month and the option that I'm using here. So pretty simple, pretty simple. Let's take a look at CVNA. CVNA setting up. Right now, I'm looking at this area as a buy area or a slight breakout. I would get it if somebody looks at that top and says, well, I don't want it until it breaks out over 50.77. I think that's fantastic. You have a plan, and you're ahead of the game of most people right there. So, way to go. Me, I like it here, or I like it on a breakout. Target-wise, let's look at the dotted deuce up here, and then look at about 103.25. X, let's take a look at X. Now, X would have been a buy yesterday. Unfortunately, yesterday we were all plagued, I was plagued with these doggone CPI numbers. The doggone, fear that there's going to be something not so good. And by the way, by the end of the day, it could be not so good, okay? Just because the market is up pre-market here does not mean we're going to close that way. So keep an eye on that. X is a great looking chart. We've got the 200 period moving average to deal with along with this top over here, or about $26. The next number I would look for is about 31.20. It's so easy to set that plan up. I still think it's in a buy area up here. Look at IGT. IGT is one setting up. Here we have a nice bullish trend. I don't know why I didn't put the plan in this one, but I will. We have a nice looking trend here. I'm going to do some adjusting here once I put up a couple of things here. You know what? I'm not even going to mess with this one. Let's just get rid of that. So there, we could probably put one in here maybe. There you go. We'll put one here. Yesterday's low, T-line. That's pretty nice. I like that. Simply draw the box. It's not difficult putting a trade plan together. There's a possible 26-27% from that low. So, of course, if you buy a little higher, you're not going to get that full 26%. But there's enough room there. I think we're okay with 20%, don't you? So let's put a little buy in here. I'm going to put a buy right here inside this area. Right there. For the person that's dying to type or in the middle of typing, just stop. Aren't you worried about the dotted deuce? Point is not am I worried? The question is, are you worried? And if you are, there's your entry. Like, trading is so crazy simple, but we get ourselves tied up into problems. We make our own problems. If you are afraid of the dotted deuce here, if you're afraid of that, you don't want to buy it, okay. What's wrong with that? What's wrong with putting that entry up there? Now, if you have trouble with the actual entry, that's one thing one can talk about each and every day in the trading room. If you have trouble with that, we can certainly talk about that. So, but for me, right now, I think that's a nice entry right in that area. Amazon, look at Amazon. So I drew Amazon out here for both a long and a short. So Amazon is putting in, should be a morning star signal, I think, kind of a morning star. It's not going to show this candle. Well, it'll be a gap. If it goes up, that would be a morning star. Yeah. So I'm looking for Amazon up here. Oh, hang on for a second. Hey, everybody, can I put everything on hold here just for 1 sec, please? Sorry about that. Okay, I apologize. I'm getting my new internet installed today. I'm excited. So I'll have 2 internets. I'm not going down again. Okay, where was I? So Amazon is set up for both a long and a short. Just in case things didn't go terrific today, then I was going to look at this area right there. You see the 2 red boxes as an entry and target down toward that 50 period moving average. And that would have been about a 14, maybe 15%, depending on where you bought it or shorted it. And then in case we move to the upside, this would be the buy area here, which we're there breaking out slightly. And we're good with that. I mean, I'm good with anything right there for an entry. Looking for about 18, 19% up here to about 160, 160. Let's see. Let's take a look at Uber. We're not going to look at all these today, but we'll look at a couple more here, okay? So Uber, 44.90 as what I would call the big target. Now, what is the big target? The big target is the stock moving up, but everybody knows you're going to have pullbacks. That is a trend. Look at this. Here is a trend from here to here. And look at those pullbacks. There's always a pullback in a trend. So it might take a month. It might take 2 months to get up there. It might take just a few days to pop up if you're just a few day kind of a trader. So either way, I still look at 44.90 as a possible target up here. I see 37 as a possible target right through here. And we will need to get through that 200 period moving average right there. So for the trader that says, well, I don't trust it until it gets over the 200, well, not a problem. There's your entry right there. Piece of cake. You just have to wait for your entry pattern. And your pattern could be a pullback like this. Your pattern could be the 3/8 trap that we talk about all the time. The pattern could be a breakout of this high right in here. Maybe your pattern is something different. Those are the patterns that we tend to use for an entry. Let's take a look at Bank of America. So I've been griping about banks for a little bit here, but I can't let my griping about them get in the way of trading. I can't let it get in the way of my job, what we do. So gripe all I want about banks. I have to look at the chart. So as I'm looking at this chart, we've been rolling sideways for quite some time here. Here we did pop up. We got a little nasty, but we really held on. That nasty candle there did not have any follow through. We've got a little Fig Newton chart pattern, very little. Not the best Fig Newton chart pattern, but nevertheless it is. And now we have a gap up this morning, putting pressure right here on my buy box top. I think that's fantastic. So Bank of America could be a trade coming. I could see that coming. 35.60 is a target. The dotted deuce, of course, is a target. 38.70 is a target, and the 200 period moving average is a target. So why don't we just go ahead and put lines right in there like that. And then I see 44 or about 30% as, if you're into the longer term. Or here's what you might do, what I might do anyway, is as I'm looking at Bank of America, if I get into Bank of America, look for that trade, maybe get into that trade, make some money. I know, everybody knows, and I do mean everybody knows, and they need to know that this stock will pull back. This is just a fact of life. I can't say it's going to be right here. I can't say that. Obvious places are going to be right there, I think. There's two obvious places right there. So, in fact, maybe I should just do that. So here we go. Let's get this going. So boom, we're in here. We pull back. Okay, that's a great place to take profits. Let it pull back, keep it on the watch list, and get ready to trade it again. Now, some traders simply come in here and you're going to set your stop. Stock is going to move up. You're going to come up here. You're going to set your stop, and you'll just keep moving your stop up. It's certainly possible. What else are we going to look at? And then we're going to call it a day here. Let's see. Look at one more. Let's see what AR is doing. AR is on my watch list. We're above the 50 period moving average. We've done a really good job here. But because of this chart pattern right here, because of that chart pattern, bearish head and shoulders. I'm not afraid of that. I'm not afraid of at all. But I'm not going to buy it underneath. I'm going to buy it when it starts to move up and challenge that. Actually, probably maybe move that up here, just like that. There we go. This might be the buy area. So a typical entry might look something like this. Up, pull back. Show me some buyers right here. Show me that we're getting ready to pop out and take on that shoulder over here. Now that becomes a trade right in there. All right, let's call that a day. we'll take a look at more of these in the trading room after the market opens. I want to thank everybody very, very much for being here. I truly, truly do. I know from all of us right here from Right Way Options and Hit Run Candlesticks, we appreciate you being here. Thank you so very much, and we'll see you guys all in a little bit when the market opens, okay? Take care.